Hello and welcome to a brand new year 2024 and brand new episode of Big Deal. Let's today focus on crystal gazing on what lies ahead on the deal street for this year. And to do that, joining us in the studio today are Akshay Chudasama of Shardul, Amarchand, Mangaldas, and Vivek Soni of Ernst & Young India. And also with us joining is Rahul Bhasin of Bearing Private Equity Partners India, joining us from Delhi a little later on the show. Gentlemen, welcome to CNBC-TV18 and wish you both a very happy new year. Akshay, starting with you, how are you seeing the entire M&A landscape developing for this particular year? Last year was muted on M&A, but we saw a lot of private equity and capital market action. What are you projecting for this year?
I think it's going to be, well, for a start, Happy New Year, Nisha. Happy New Year to everyone, and thank you for having me on the show. I think it's going to be a very, very interesting year. India is in a very, very sweet spot. Geopolitically, I think there's a lot of focus on us. We've got a lot of tailwinds favoring us. I think also given the fact that there's going to be a slowdown in capital markets, given that we're going into a general election, there's going to be a lot of M&A activity this year. You're right that last year was slightly muted. 2022 was a great year. 23 was slightly muted. I think private equity players have a lot of dry powder. Corporates have stronger balance sheets. So we're going to see lots of activity in 24. That's my prediction.
Right. So lots of activity on the deal front. And also now there are some important, events in this particular year. There are elections. And there are several other global factors which are also impacting. Vivek, you focus on the private equity space, which had the most, I think, eventful year last year. Maximum amount of exits from some of the foreign private equity players. Is that block deal scenario going to continue in this year because markets are still buoyant?
Yeah. Firstly, thank you. Happy New Year. Great to be on the show, and Happy New Year to all the viewers. On your question specifically, the short answer is yes. The capital markets are definitely buoyant and there is a lot of appetite, and more asset managers globally are looking very favorably at the Indian market.
Right.
And that's propping up the appetite for block deals by private equity controlled enterprises or enterprises where private equity has meaningful stakes. And the fact that they have been able to do these block deals at minimal discount is, a signal of the growing depth of the Indian capital markets,
yes,
which augurs really well for PE as an asset class.
Right. So private equity blocks, as long as they can sustain, that is going to continue. But we'll talk more about the buyouts as well as the themes. But also Rahul Bhasin will be joining in terms of the private equity play. But in the interim, Akshay, a lot of things have changed when we talk about the legal landscape, the regulatory landscape. What is on top of your mind on the legal aspects which are going to really impact the deal flow as well as the transactions for this year?
There are three legal developments, if I can sort of discuss them very briefly. The first is that the Competition Act has been amended. It was amended last year, but it's not yet been notified, and we should expect the rules on that. That's going to bring in the concept of a deal value threshold for the first time.
Yes.
So that is something that will definitely impact M&A activity. Saying that, the Competition Commission has been very proactive. We've seen them do a pretty good job in terms of the speeds at which they've been acting. But with deal value threshold, there is certainly going to be an additional level of complexity which wasn't there so far. So that's the first area. The second is the DPDP legislation. Now, this may not have a very direct impact on M&A activity, but it's certainly going to lead to lots of further compliance requirements. Companies that are acquiring companies outside of a court scheme will necessarily need to look at how the new legislation will impact them. And the third area...
Yeah, so Akshay, third one that you have on your radar is very interesting.
Right.
I want to bring it up a little later and
Sure.
have a more deeper chat on that, because
Sure.
I am also, a related or an interested person in that particular aspect. Sure. So I have, there's some telepathy. I have really understood what you were going towards. But let's introduce Rahul, Bhasin. Rahul, you've been listening to the conversation. We are trying to crystal gaze the deal scenario for the year 2024. Now, private equity, they have capitalized on our capital market valuations quite effectively for the last year. How do you see this particular year in terms of investments as well as exits?
I think your previous panelist summed it up beautifully. I think the party continues. I don't think that we're anywhere near the end as far as that is concerned. And I think the reality is that because of the fact that the rest of the world seems to have all kinds of issues. I mean, you can sort of break it down into one place, one geography or the other, that India kind of stands out in that perspective. And clearly we are seeing that as far as exits are concerned. I mean, earlier we had to work hard towards exits. And now most of our exits, I mean, we have buyers kind of hounding us for things. So I definitely think that, exits will be good. And when exits are good, then capital raising is typically good as a cycle. And if you look around the world, I mean, you're seeing one of the big challenges is that most private equity funds around the world have got almost $2.6 trillion of unspent capital.
Yes.
So it bodes very well for, the cost of capital in India continuing to go down and for a lot of deal activity. I think they are always, we're an emerging market, our regulatory frameworks, etc., keep evolving. And I think that sometimes we get a little bit excessive in certain aspects of it, and sometimes we get the balance. But I think if I look at the trend line over the last 25 odd years, we have systematically been improving. So I don't expect those kinds of things to be a serious impediment. Though, I think that some of the Competition Commission rules, for example, I very strongly believe that I think there's a bit of overreach in terms of, especially when it comes to regulating deals on private equity side, aggregating deals and looking at them as, as something which affects competitive dynamic for fund structures which have limited life. I think it is regulatory overreach in my own mind as far as that is concerned. But that is the regime and we have to live with it. But I do hope that, greater sagacity prevails as far as that is concerned. Not for any other reason. It doesn't change any deal dynamic. It just creates, friction in factor mobility. And that's never good in terms of efficiency of capital allocation and within an economy.
All right. So point well made. And Akshay, you want to jump in on this? The regulations and the CCI overreach that Rahul was talking about.
Yeah, so I think what Rahul is actually referring to is, the CCI's interpretation of control and how, a private equity player, even with very limited rights, could deem to be in control of a company and therefore needs to approach the regulator. So I think that's a fair point. However, saying that, I mean, our experience has been that the CCI has been very proactive in giving approvals. Green Channel has been a huge success. It's something that we've seen put to work very efficiently and effectively. So I mean, yes, he does make a valid point, but at the same time, regulators, and not only the CCI, if you were to look at SEBI, if you were to look at the RBI, and if you were to go back, let's say 7, 8, 10 years, we find that regulators are easier to approach, and they're being slightly more proactive. Sometimes there is overreach. An example of where I believe that there has been a little bit of overreach is in not defining, for press note 3, not having any threshold in place.
Yes.
So, so there are things like that where I think that a little bit of clarity could help.
Right. So ease of deal making is one thing we need to work on, but ease of exits, that's what Rahul also spoke about. And Vivek, jump in on this one, because ease of exits is, you said, is one of the biggest milestones for India. But most of the private equity firms are now putting in more capital and are going to deploy more in India. As I've spoken to everybody, India is a choice destination. What is the sense you're getting, and what is the kind of transactions that could really be coming out in this particular year because of higher deployment?
It's a fact that India is, let's say, the time has come. The geopolitical stars are aligned. When you look at the emerging market allocation basket, India stands out. Not many people are favoring the erstwhile leaders of the emerging market pack. And so the amount of dollars that are looking to get deployed in India have definitely increased. Now, what are the key themes? One is, which comes to mind, is financial services. Typically, credit growth is 1.5x your nominal GDP growth. Our nominal GDP growth is around 12%, so take 18 to 20% credit growth. That will need a fair amount of equity capital to fund that growth. Last year, there was a bit of a dip in private equity investment in financial services. This year, we expect it to catch up. That's one. Secondly, making in India for the world is another large theme across pharmaceuticals, chemicals, automotive, industrial products. The third theme is, of course, the rising confidence of the Indian consumer and what we need to make to satisfy the need in India. India is about $3.2 trillion of GDP, growing at 6.5%. That's about $220 to $230 billion of GDP being added in the next 12 months. And in the next year, even more. That needs a significant amount of capital to create that growth, right?
Yes.
To fund that growth.
So capital, is coming in from private equity. That's been fueling our India's growth story. But in the last year, we have seen more exits than the entry levels. Rahul, investment-wise, is valuation mismatch between the public and the private market a big concern, and is also one of the impediments for conversion of deals?
Look, that happens from time to time. India has historically been a very illiquid market. There have been times when the public markets offering much lower risk have been much, much cheaper than the private markets. But broadly, I would say, other than for very large transactions, I would say that the reverse has been true right now. I think private markets are far more attractive than the public markets. And that has been the case. Now, in the last 2.5, 3 decades, there have been several instances where the reverse also happens. And that's, I think, largely because of everybody chasing the same paradigm at the same time. And whatever succeeded yesterday, everyone thinks will succeed tomorrow, which very seldom happens. But that's the way market psychology tends to work. But at this moment, I don't see that. I think the markets, I think the risk-return sort of trade-off is quite, I would say, decently priced. And I think that there's ample opportunity right through the value chain. I think last year and year before last, especially in fintechs, I think one saw a big aberration. And maybe to some extent in consumer tech, I thought that the private markets got ahead of themselves, but I think all of that is corrected. So I think we are back to ample rationality.
Rationality, yes, when you talk about the tech-based, digital-based companies to a large extent, and we've gone through an whole curve to really come to some bit of nationality on that. All right, hold your thoughts there, gentlemen. We'll come back after a very short break and we'll talk about the themes and the sectors that are emerging as probably more acquisitive in nature for 2024. Stay tuned. Welcome back. You're watching Big Deal, and we are crystal gazing into the year 2024 when it comes to the deal street. So, Akshay, what is going to drive M&A? What are the themes picking up and the sectors which are active?
I think there's 2 themes that we see consistently from our clients, and Vivek and Rahul can also speak on those themes. The first is that clients want to do more and more control deals. Nobody wants minority positions. They like to be in the driving seat. They're no longer scared of being promoters of companies in India. So that's one theme. The second is we see a lot of platform deals. So if you were to take, for example, in the infrastructure space, green energy as an example, a case in point, again, nobody wants to buy just one asset. What they're looking at is they're looking at buying, of creating a platform, very often using good management teams, leveraging on them, and going out and buying multiple assets.
Right.
So those are the two themes.
Yes.
In terms of sectors, we see green energy. The hydrogen policy has led to a lot of interest.
Yes.
We see in the EV space, both EV infrastructure as well as with all of the incentives for automakers.
So climate change and sectors of the
Yes.
future that have come up.
That's
So
right.
they are, for private equity, Vivek, which are the sectors of choice for this year?
So obviously you have infrastructure and real estate as an asset class that did very well last year and
Yes.
is expected to continue to do well, especially
Right.
when you think that the interest rate curve is going to invert now. There's
Right.
going to be gains from yield compression.
Yes.
In pure play PE, we had a reduction.
Yes.
Let me tell you what we think is on a soft spot first.
Yes.
So technology, IT, ITS, e-commerce,
Yes.
consumer internet, that's been on a soft patch for the last year and a half.
And will
think that's-
continue?
We think that's going to continue.
Yes, yes.
Simply because the cost of capital has gone up.
Yes.
And unless you have businesses which are generating profits,
Yes.
right, and you have a clear line of sight to
Yes.
seeing value creation,
Yeah.
the likelihood of deals happening in that space
Yes.
continues to be the same as it was in the previous year.
All right. So startup space, that is going to struggle. The struggle will continue. But, pharma healthcare has been one big pick, and that is likely to also continue. Rahul, your top picks for investments for this year. Spell out your strategy. Last time you gave us a very good idea. Space tech is something that you have been investing in.
Yeah, we have been investing in AI, space tech, the circular economy, the EV transition for the last 5-7 years now. I think going forward, I think the thing which is most sort of under sort of focused on is the fact that, there is more and more evidence coming out that we use so many chemicals as human beings that we have no understanding of. There are only 200 chemicals that we use which we understand the impact on the human being and the impact on the environment. Only 800 that we understand the impact on human beings and not even on the environment, but we use 64,000 chemicals worldwide. And I think that increasingly science, research, data is coming out which suggests that a lot of them during their life cycle is causing serious sustainability issues and health hazards to human beings and to other species. And I think that that whole transition into a chemical sector and a chemical usage, which would be actually good for the environment and good for human beings, I think that's a very massive opportunity, not focused upon, but I do think that that's going to be something which is very, very large. I also think that one of the big challenges that a lot of companies have, and it's a really strange thing. If you see most political debate in our country, they talk about, there not being jobs. And you go to most boardrooms in the country and you talk to them, what's your biggest problem? They tell you that they're not getting talent.
Yes.
And I think that there is a very crying need to reform not only the form of the education system, but the execution with which the money is spent across the country. Because we need people who are employable.
Yes.
I think another constraint that I see across businesses around the country, which again needs some degree of addressing at some level, is the fact that, when you want to integrate into the global supply chains, and which is something that right from the Prime Minister downwards, the country is focused on, we have to create urban infrastructure and urban quality of life, which is, which would attract international talent to come here and stay here.
Right.
And I think that urban reform and lifestyle, I think that's something which still has a long way to go.
Right. It's
but
important
short of
that
these constraints.
Yes, that an investor is pointing it out, the education and the quality of life, and that's very, very critical because you assess that also while making an investment. Analysis for a company or for a geography as well. Thanks for that, Rahul. But my final question, Akshay, to the burning issue and which affects all of us here, is the SEBI's consultation paper on market rumors and the verification by the company. What is your legal sense on this if in its current state really comes into play?
So I think it's, personally, I'm against this amendment. I think that it's fraught with risk. I believe that it can be very easily manipulated, and it might actually be counterproductive in its implementation.
Right.
So I personally am not in favor of it. Imagine a situation where, information very often does leak. We live in an environment where there is going to be a leakage of information. And as M&A practitioners, we do deals all the time. And when we're doing these deals, there's absolutely no certainty that a deal will go through. And if at that stage you're supposed to comment on on market rumors, on market speculation, there's a very strong chance that what you will actually do is create a false security in the markets, because you would need to necessarily admit that there is a transaction that's potentially going through.
Right.
The chances of that transaction actually materializing may be very, very small. And, the price can run up. It could lead to, it can actually lead to investors getting burnt.
Right. All right. So point well made. We'll have to see for this year if this particular amendment really comes into play. It will change the way the listed companies do deals, and the confidentiality is at risk, as the Legal Eagle suggests in our show. All right. With that, it's end of this edition of Big Deal. Thank you so much, Akshay, Vivek, Rahul, for giving your insights on what the next year or this year is going to look like when it comes to the deal street. So happy deal making for 2024. Thank you so much, and thanks to all our viewers for tuning in.